Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 14th, 2021. We'll keep this video relatively brief. I wanted to do an update on the equity markets and also gold and some of the related trades that I've laid out recently to gold, such as GDX and Palladium. And time permitting, I'll touch on some of the other some of the other commodities I've talked on lately, such as crude, natural gas. But really, let's talk on the markets and the metals. All right, starting out with the S&P 500, nothing new really since yesterday. We hit my first target, that minor target. I still favor at least, again, minimum target is 436, where I think we're going near term. Right or wrong, we'll see. Only time will tell. But we hit that first target. We had a bounce. As the initial tag produced a reaction, and we're still having a reaction. I define a reaction as a bounce and or consolidation on a level when you fall to it on the downside or when you rally up to it on the upside. So we had both so far, and this is a bounce and a consolidation. You can see we're trading around that 45.90 ish level. That's the actual support level. Target was 446, and this is less than a 1% move. Remember, SPY is a 446 point security, and so these swings right here, although in points, measure, what is that, 4.5 points or whatever, it's less than 1% from top to bottom. So that is nothing more than a reaction so far, and I still believe the resolution will be to the downside. And it's also, and I wanted to do the video now because this is an objective short. We're below it. We didn't get that impulsive solid break below yet. You can see each of these candles, we snap right back up, but we are trading below it, and I still favor this. And as I said yesterday, we keep getting check marks, so my conviction keeps going up that we're finally on, have just started the next tradable correction or tradable downtrend. So like I said, sell signals back here were a little iffy, and they got better and better and better, and so far so good. So that's that. Let's not talk much more on it. You're either going to take it or not take it. That's up to you. But I wanted to point out it's objective. I'd like to point out, the objective times to go long or short. A lot of people want to short after the market's dropped 5-10%, and that's a lot of times that's when you should be covering and going long. So I think we're still in the early stage of this. And QQQ even better. We had that nice level right here, 378.44 recent trading range. We had sell signal number 1 right here on the breakdown. I'll just circle it. Sell signal number 1, bounce, 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 broke down. Sell signal number 2 on the breakdown. Objective short entry number 3 on the back test, and then look, perfect back test today. Look at that. So say what you want about it, where you think the market's going to go, but I think you're going to find it hard to argue that this is a level that traders are watching and trading off of, and the fact that we bounced and reversed off it today gives me another check mark. Again, anything can happen. We take it back, and that's just how it works. Doesn't mean that we're going to go blast off to new highs, but it does mean that if you look at these levels and you just do it objectively, you can short there, you can keep a tight stop, or you can put a stop above the recent trading range. You could even short right here because we already had a reversal off there, and we're not that far. We're only right now, as I do the video, 0.4%, less than 0.5% below that level. And I think we're coming down here to at least that T2 level before all is said and done at minimum, and that's another 4% drop from where we're at. Or if you shorted today at the back test again, or yesterday, you're talking almost a 5% drop. So that's how it should play out, something like that. I'll move down here to about the 369.50 area, probably get a reaction off there, and buyer step in, and then another leg down, something along those lines. Okay, we're going to move on to gold. Remember, it's been slim pickings in the stock market, whether you're a bull or a bear. The market's been inching higher for months now, not really running away. Momentum certainly slowing. Momentum indicators are rolling over. And because of the fact that it's been just fewer and fewer stocks, mainly those large ultra mega cap FANG stocks, and a few others doing most of the heavy lifting, as I showed you before, just about every single breadth indicator has been deteriorating, saying fewer and fewer stocks are going up, and hence the reason I don't have a lot of trade ideas. The primary trend is up, but the majority of stocks aren't going up. So, Apple, Amazon, there's no setups there for me. They're going up, but they're not in bullish chart patterns or continuation patterns. You just buy the dip till it stops working. But so I continue to focus on alternative assets such as commodities, precious metals, and I still very much like the pairs trade I mentioned on the I think it was August 30th or 31st, I believe, the last day of the month. Did an extensive video on the metals and miners, and laid out a case for why I'm bullish on gold, longer term bullish and intermediate term, and then bearish on Palladium. So I'm going to get that in a second. The Palladium trade has been great so far for the last couple of weeks. We're up well over 20% since that video for that short idea, and I'll get to that in just a second. So gold has been more of a slogging around. We look at the daily chart. I don't want to spend a lot of time here. I've talked many times over the last few years. I believe this to be bull market consolidation, a correction with an ongoing bull market. We exited our long-term gold positions here, or at least I made the case for that. That's what I did myself. And talked about re-entering into those positions, long-term positions, that is, back here at the buy zone. And we've had several opportunities this year. We've had, let me change up this tool here. We've had 2 pullbacks to the bottom, which is solid support. Remember, the top of the zone is moderate support. And this recent pullback towards the bottom of it, and each one so far, gold is doing what it should do. The buyers are stepping in. They're coming into the buy zone. So unless this level gets taken out with conviction, big move down there, I remain longer term bullish. And what I'm watching at this point, I don't have a really good downtrend line to draw, so I'm watching these previous highs, and I think as and if each one gets taken out, which I believe it will, it should spark more and more buying. And again, let's keep it simple. So that's long-term trade idea. And then active traders, I kind of zero in for both active traders, swing traders, as well as investors and trend traders looking for objective levels to micromanage a position. In other words, you might be bullish on gold longer term or bearish. And you're swing or trend trading it. You have investment positions. It's these 60-minute charts that'll help you zero in on the objective levels to add or take away from your positions. And let's keep it very simple. Big level to me is right here around 1777. Gold remains above that support level, and an even bigger level here about 1838. We'll call it 1840. It's the top of the recent trading ranges. We're right smack in the middle of the trading range now, but so far, just in the last few days, as I pointed out yesterday, we have positive divergence. First time in a while on the 60-minute chart. We're starting to move up impulsively, and if you zero in a little bit here, you can see we just recently took out that previous reaction high. We're at this resistance line, give or take about 1808 or so right there, and I believe if we can power through there, which I think we will, that should propel us up to the top of that trading range again, up to about that 1838 level. I think that's very likely, and then big things to come, I believe. Oops, I think I zoomed out too far there. Bear with me here. Let's put it back. And so this is a level. It's still a big level to me. We need to take it out. Well, last time we got there, we got rejected, and I think we'll make another run for it. And then once we do, it should open the door to more upside. So that's that. And then again, GDX. Gold mining stocks, they tend to move with gold, and just like gold itself, back here, said it was time to exit long-term positions. We had negative divergence, clean up trend line, bearish rising wedge, sell signal, long-term resistance on gold, on the euro, long-term support on the dollar. I don't think a stronger case could have been made to book up profits there on long-term positions, and that so far was marked the top of the bull market since gold bottomed in December of 2015. But and I still view this to be a correction and an ongoing bull market. And so at the same time gold hit the bottom of that support zone, GDX has just as good, if not better support. Really nice support there, and that was highlighted all those 1, 2, and most recently 3. We'll call this 3 because we're still there. I think it's still objective to be accumulating gold and silver mining stocks here with a stop somewhat below the bottom of that range is about 30.70. And so far so good. And just like you first and foremost, you're going to need to see gold break above that the top of the trading range I just showed you. Here's a comparable level on GDX. It's about 34.50. But let me say it this way: even if GDX went and broke out there above that level, if gold doesn't break out of its trading range, that breakout would almost certainly fail. So I wouldn't take it. I'd wait for gold to break out before getting taking full positions or being aggressively long the miners. And then if you're looking at it as a trend trade, it all depends also on what the stock market does. So we'll see if gold breaks out, how the market's doing at the time, because the miners, we say, they in strong market corrections and bear markets, they tend to get dragged down because they're equities. Anything else, even a regular run-of-the-mill correction, they can and often will move up with gold. So we'll just have to take it one day at a time there. So that's it. Very clear. I remain intermediate to longer term bullish on gold and the miners, as well as short term. Little bit of work to be done. Probably not an all-in long position at this point in time, again depending on who you are. But what's really paid out nice is Palladium. Again, that was the August 31st video, which was dedicated to gold, the precious metals, gold, silver miners. And then it was towards the end, it was a long video, probably about the 30-minute mark or so. I wrapped the video up with a fundamental and technical coverage of Palladium, and made a case for both a pure play short, meaning you just, let's say you don't want to touch gold because you don't know where it's going, it's been chopping around. Palladium you could short outright, or a pairs trade. And so if you're frustrated with the gold for just kind of chopping around for the last few months, but you took that short, so far you're good for about 23%. That was it. We nailed the high right there. That was when the video, Palladium was mentioned as a short trade. Look at that. That's the biggest drop that we've had in years. And I think there's a lot more to come. So I'm not even laying out these lines on this chart are old targets. We've been trading this one long and short for years. But what I'd focus on is this long-term chart here. This is Palladium futures. This is a weekly chart, weekly candles. And again, I'm not going to spend a lot of time on it because I covered it in detail in that last video just a few weeks ago. You can reference that. But you go back in time, I like to look for these divergent highs and divergent lows. That's when I get bullish. But divergent highs, I didn't even measure that drop, but I can tell you right now we dropped from 1100, which is my long-term target right here. This was back in 2001. 1100 down to, gosh, what is that, about 100? So, that would have been a monster short back then. And I'm doing this because this is the nature of this beast. 51% drop, 39, 72, 38, 50, 28, 51. And from where I think we're going, I'm giving you a long-term target now of about about 1100. Again, it has these two major reaction highs in Palladium. Right here and here. Fundamental case was made, as well as a technical case. This beautiful negative divergence right there. First time we've had divergence on both indicators since back here, where it was good for a 50% drop. And we're at 2079.80 or so right now. That's yesterday's close. And I'm calling for ultimately, I'm not going to go straight there, but ultimately a drop down to 1100. So that would be over a 50% drop from where we're at now in Palladium. And again, right or wrong, so far it's playing out nice. We've seen a pretty impulsive selling in Palladium, and again the charts and the fundamentals confirm it. Okay, we'll keep the video short. I'm just going to wrap up with crude and natural gas. I point out the same thing. They're both at long-term resistance. Well, crude already has pulled back off that long-term resistance. That was highlighted back here a few weeks ago. This red line, whatever that is, 78 or so. a barrel. Was big support back then. Let me change this tool. Big support right there. Multi-year trading range, broke support. Rally back to it, failed. Rally back to it, failed. So I see more downside to come in crude. Again, it's not just the fact that it hit resistance. That's one thing. Almost all my long trade setups that I put out there are stocks that are rallying up to resistance, but those are resistance levels that I expect to be taken out to trigger a buy signal if and when taken out, and that is again based on a lot of other factors, including but not limited to things such as divergent, overbought or oversold conditions, and chart patterns and fundamentals and everything else that kind of goes into that. So that's it. And again, it's simple stuff. If you shorted that pop into long-term resistance, you're still very profitable despite the recent counter trend bounce. And you put a stop. At this point, you could put a stop at break even. You risk nothing at all. You had a nice entry. This is what it looks like on the daily chart. That was that top right there, long-term resistance, and you broke the trend line right there. You had the negative divergence on weekly, the daily, the 60-minute, all indicators, all time frames were confirming a short back there, and that's it. We've been zigzagging lower. We broke the trend line. We back tested once. We back tested again, and we're back testing again. We're still below that trend line. That's a daily chart. And then finally, we'll look at a 60-minute chart, and we'll wrap it up. Yeah, that's it. So we had the potential for a head and shoulders that never panned out. No big deal, because the divergence that we had in place at this, what at the time was a potential head, we had a divergent high there. All we do is move the lines up like this, and we still have, we not only still have divergence, we have even larger divergence now. So what does that mean? Well, back here we had some pretty good divergence, pretty good drop. There, divergence, there was a small divergence, small drop. Again, I say this all the time, the scope of the divergence is not, there's not a hard and set formula, and you don't always get a bigger drop with a bigger divergence, but it tends to be that way more often than not. So again, as I showed you here, kind of small divergence, small drop on the initial leg down, bigger divergence here, bigger drop from that point. Then we put in a divergent low, and so that's it. So we'll need to see, well, it would certainly help to see the indexes, fail here, on the resistance they just back tested today, take another leg down, then crude should move down, and then you need to take out this line. That would be your next check mark on a break of that. You can see my targets down here, and I still think we're coming down at bare minimum. These are just near-term swing targets. Again, you zoom back out to that daily chart for the longer-term targets. So, and like anything else, you spread it out. It's like any trade. Might be wrong on crude, correct on gold, wrong on palladium, right on natural gas, et cetera, et cetera, et cetera. And that's why, diversification's key. Not just over the long run, but even day to day. It smooths out the bumps in your portfolio. Right now, crude's up slightly, 0.24%, but which I'm short on, but gold's up 0.75%, and so that again, I can't say much more. Diversification is every bit as important in active trading, swing trading, as it is in long-term investing, in my opinion. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.